Bitcoin will replace the US dollar sooner than you think. There's a few major data points that already show this flip is happening, and when that does happen, the rewards are going to be massive for those who get in early enough. Ask yourself a question. What do you think will be more valuable in 100 years? Bitcoin or the US dollar? I'll let you think on that, because recently former Twitter CEO Jack Dorsey, he explained the one reason why Bitcoin is going to take over: permission.
We're going to talk about how technology can take away that need to ask for permission, and actually how to practice it.
But while this was happening, the greater Bitcoin world at large was all over the place. Germany dumped Bitcoin like crazy, causing the price to dip. The SEC was demanding more regulation. Big multinationals like Sony were swallowing up exchanges, bringing more unwanted centralization into the space. The atmosphere, it was confused.
John, what's going on, man? What is happening?
It doesn't feel indicative of a currency about to take over the world. And then this happened, adding even more confusion. Bitcoin pumped because many took Trump's survival as a sign that he's going to win the election. And that matters because Trump's been bullish on Bitcoin. He's called for Bitcoin's future to be in the US. He says he supports the right to self-custody, which is good. You can feel the flip in the air. In this video, I'm going to take you through why Bitcoin and the dollar are engaged in a silent war, a war that Bitcoin might be winning. I'm going to show you why this ties into Jack Dorsey's idea of permission and why this means Bitcoin is going to get bigger than anyone ever imagined. Now, none of this is financial advice, of course, it's just my opinion. I encourage you to do your own research as well. The way the US controls the world through its currency has a huge impact on Bitcoin. To understand how, you need to know what the US has been doing this entire time.
Understanding the USA.
The US and its dollar is the most powerful piece of paper in the world. It's held in central banks all over the world as the #1 reserve currency.
The strength of a nation's currency is based on the strength of that nation's economy.
The US dollar is so stable that other countries hold the US dollar just in case their native currency becomes worthless.
It's crazy.
Also, a huge amount of international trade is done using the US dollar. This is most evident in everyone's favorite scarce asset, oil. 3, the US financial system is the most liquid in the entire world, meaning a hell of a lot of investment is done in US dollars. And likewise, the US has its mitts on SWIFT,
Society for Worldwide Interbank Financial Telecommunication,
which underpins all international transactions. These all come together to mean one single thing. The US, through the US dollar, wields significant control over the entire world's money. I'm gonna let you in on something here. Money is just an accounting system for value. So really, the US wields significant control over the world's production and exchange of value. If you're a non-US country and you wanna play with dollars, you need America's permission first. There's Dorsey's word again.
Permission.
Remember it. It's extremely important. For the US, control is the aim of the game, and you can bet your ass they abuse it. The US can control so much. They can control whether banks, companies, individuals, or entire countries engage with the financial system that they're running. They can tell Iran or Russia, whoever they want to, just get lost. When a country has been sanctioned like this, they're pretty much out of the finance game, and it's very difficult for them to conduct international business once they're out of the club. The US can also freeze assets that are held in US banks or US dollars. It can block transactions, it can cripple the flow of money, and that just disconnects the individual or the company or the country from SWIFT, that global payment system. The US has used this for years to influence and control the entire world, sanctioning enemies like Russia and Iran, making everyone ask for permission. But this financial control, it comes at a significant cost. As you can imagine, the rest of the world, they don't love this scenario. Who wants to ask for permission?
Nobody wants that.
They've started to band together. And little do they know, but they're actually helping the flip to crypto dominance by banding together against the US dollar.
BRICS.
Meet BRICS: Brazil, Russia, China, India, South Africa, Iran, Egypt, Ethiopia, and the UAE. They're 30% of the world's land surface, 45% of its population, and 33% of the GDP. And they've banded together for a bunch of reasons. But if you look at their actions, it's pretty clear what their real motivation is. They want to develop their own alternative payment system to SWIFT. They're looking into bilateral trade agreements. They're diving into national digital currencies, blockchain tech, DeFi. They've even looked at a common currency to, circulate amongst themselves, which is to say, they're looking to get away from the dollar. They're looking to escape the need for US permission. And this is threatening to the US. And if BRICS pulls it off, they'll reduce demand for the dollar, diversify currency reserves, establish an entire alternate financial system from the US dollar and US financial system. And worst of all, this will hurt the dollar's global perception, potentially triggering a move away from the dollar worldwide and an erosion in US power. So it's not looking great for the dollar. But this is great for crypto. If the US dollar loses dominance, or if the BRICS currency gains dominance, both of those options are actually good for crypto. This is obvious when you realize that as individuals, we're suffering from the US government's decisions as well. And as individuals, most people would rather rely on a decentralized currency than an entirely new centralized one. That also seems obvious. So in particular, the US decision to keep printing money. The more they print, the more inflation goes up, more value goes down. This just happens indefinitely. Look at a chart of the dollar's value over time. This just hurts everyone. So quietly but persistently, there's a growing need for an alternative to the dollar on the macro and the micro level. And luckily, a solution already exists. On the international level, Bitcoin allows people to avoid sanctions. On a personal level, it offers an alternative to the rampant dollar inflation or defunct national currencies that just happen to every currency over time. There's no need for permission from the government in Bitcoin. There's no need for permission from banks in Bitcoin or other cryptos. It's just good to go in a lot of ways, which brings us back to the beginning and the former Twitter CEO, Jack Dorsey. I encourage you to check out his full talk, but for now, I want you to focus on two ideas: permission and value. Those were central to Jack Dorsey's talk. Here's him explaining how Bitcoin's constraints make it inflation-proof.
Satoshi also put another constraint on Bitcoin, which he said there's only going to be 21 million Bitcoin. And what that means is it's a constrained set, so there can never be any more printing of Bitcoin, although you can devise them almost infinitely. So you don't need to own one Bitcoin, you can own a bit of a Bitcoin and spend it. And what that means is you've built a deflationary currency. So instead of inflating the currency, which is an invisible tax, making all your money less and less valuable, you have a deflationary currency where as time goes on, it continues to increase in value because it's more valuable to people and they understand like how it can be used and what it can be used for. And just by that, as you hold Bitcoin, it goes up instead of going down. And it can only go up because of this 21 million coin constraint. Now it has variations over time, but if you look at the close to 15 years of its existence, 2009, you only see it going up, and that will continue.
He also explained how Bitcoin's setup makes it inherently decentralized and permissionless.
The reason this is important and why he solved this problem is now we don't have to go to a bank to say that this transaction is valid. It's tens of thousands of computers who are constantly validating the transactions. You don't have to go to a government to issue the money because the computers are doing it themselves. And there's no leader. Satoshi has disappeared. There's no one company that owns this. There's no government that owns it. It evolves very slowly and very deliberately, like you want your currency to evolve, through three parties: the miners, the people that find the Bitcoin and secure the network, the node runners, who are looking at all transactions and securing them as well, and the developers. These are people who are principled, who want money, who want people to be free of these permissions and these dependencies, and are doing it out of the goodness of their heart, and they also have some Bitcoin, so they're making some money. But these are people who actually want the best for the world in Central America and South America and Africa. They're using Bitcoin to send money across borders to family because it costs almost nothing to do. They don't have to talk to Western Union. They don't need to get permission. They can send money directly to their family and it's received instantly. They're actually using it for payments as well. They don't consider the price of Bitcoin. They're just considering the utility. This will happen more and more Western countries as we see things and as we see these dependencies and the need for these permissions as time goes on. But it's going to take some time. It's not 10 years, it might be 15, but little by little, people see the value of this system and why it's so powerful and why it could potentially be a complement or replace the US dollar, which rules everything and is currently being challenged by the Chinese yuan. These are two entities that control your money, control the value of your money, and you don't elect them. Whereas Bitcoin you have a lot more control and you have a lot more free agency around it.
The more people recognize the systems of financial control that are currently in place, the more they're going to recognize Bitcoin's utility for getting around those things. That's when the flip truly happens.
So when it's a fully Bitcoin world, that permission goes away in many cases.
Interestingly, Dorsey signaled out Bitcoin compared to other cryptocurrencies, arguing that Bitcoin had strengths that others clearly lack.
Bitcoin is very different from all other cryptos. It's the only one that has the properties to be a currency, in my view. Everything else has some scam aspects to it. And there's individuals behind them trying to make money. Individuals that can actually be called before the government and questioned or detained or jailed. Bitcoin has none of those things. So it's important to pick one with those properties, but you buy a little and then you may need it.
It's no wonder that with this invisible currency war and hunger for permissionless, inflation-proof currency, Bitcoin is predicted to soar.
I actually expect a pretty sharp rebound in the second half.
And I do think, as I said, it'll be 170,000 post-halving.
I still think Bitcoin's got a very good future ahead of it.
So what does this mean for you? Well, if you followed my ideas so far, you'll see that I'm long on Bitcoin. I see the future for Bitcoin. But to be cynical of my own argument, it's good to argue against yourself. The US won't go down without a fight. It's a robust economy and the dollar is still resilient. The dollar is still #1 by a long shot. However, the fundamental currency issues faced by individuals and the world are real, and I'm confident that this is going to drive Bitcoin's long-term price action and value. It will actually become more and more valuable. Continued sanctions and financial bullying alongside rampant inflation and increasing cost of living, they're just driving hunger for alternatives. Bitcoin meets that demand better than any other currency, so I'm confident. But how do you make sure you're not too late?
2 options.
Option A, super simple. Right now, you can buy and hold and play the long game in crypto. Keep it simple. Invest only what you can afford to lose. The earlier you get in, the better. You won't get huge returns doing this, but you'll be in the game and it'll allow your money to grow with Bitcoin and other cryptocurrencies. Option B, this one's a bit more crafty. Get into trading cryptos, increasing the size of your stack as prices go up or down. If you just hold a currency outright, you're subject to the swings of price taking you with them, which is fine. If you want to be hands-off, that is 100% fine. But if you trade properly, you can actually earn money no matter where the market goes because you're making quick trades in and out. By using only what you can afford to lose and following the right rules on the outset, you can get outsized returns doing this. Our head of research over at FINOVA, Kyle, he has done this for years, holding and trading Bitcoin. It's actually surprisingly simple. Utilizing his rulebook to grow his money over time, in just a few years, he took $26 and grew that to a portfolio worth $2.7 million by trading Bitcoin. Seriously, the biggest problem with that story is it sounds too good to be true, but that's life-changing money. Bought him a new house, bought him a nice studio, but through a ton of patience and self-control, Kyle has stress-tested his methods and racked up a win rate of over 80%. More than 80% of trades he wins across hundreds of trades. Then Kyle shares his trades with members on FINOVA. They get his rules, his entries, his live calls, all of their questions. Any question you might have is answered. If you want to buy Bitcoin and hold it through the bull run, do it. But if you want to follow Kyle's trades as they happen in real time, hit the link below to join FINOVA while spots last. Or you can check out this video where I interviewed Kyle on exactly how he trades.